Really interesting price action in wake of today's Bank of England rate decision, guys. So initially, GBP popped higher by a lot, actually, about 50 pips in cable. Why did GBP pop higher initially? Well, as expected, the bank held rates at 0.1%, so that wasn't it. The bank increased its QE program by 100 billion, as expected, although I say as expected, but actually going into this meeting, it seems as though expectations had started to build that the bank would actually do more than 100 billion. So really that 100 billion increase QE seems to have been somewhat disappointing or somewhat less dovish than expected, which goes some way to explaining that move higher we saw in GBP. So one of the key things about the fact that the bank only increased their asset purchase facility by 100 billion, it means that they're going to have to slow down the pace at which they're buying bonds every week. So up until now, from back in March up until now, they've been buying bonds at a pace of about 13.5 billion a week, but they're now going to have to slow down to about 4 billion a week. So that's quite a big reduction in the amount of stimulus that they're pumping into financial markets, guys. So that is partly why GBP moved higher. Another reason why GBP moved higher is the bank's outlook on the economy was actually a lot better than it was back in May. They kept talking about how global data basically had come out much better than expected. Obviously, I mean, you just got to look at that US NFP, that US retail sales, some data from some other parts of the world as well. And it is true, the economic recovery after these lockdowns is shaping up to be a little bit closer to that V shape we all hoped, we've all been hoping for, than we thought, you know, back in May or back in April. So that was also seen as a little bit more hawkish than expected. So GBP popped on those factors, but we have faded the move. And actually GBP USD anyway, has been pressing a lot lower in recent trades. So why is it doing that? Well, first of all, the market has seen a bit of a turn in risk appetite in recent trade. So you've seen stocks selling off, you've seen crude coming under a bit of pressure, other risk sensitive currencies, AUD, NZD, been moving a bit lower, and GBP also risk sensitive. So when you see some of those risk off flows, you normally see GBP come under pressure. But more broadly than that, guys, it's also just the fact that this Brexit issue is just hanging over the market for GBP at the moment, because the UK and the EU still in stalemate, still nowhere near an agreement in these talks. Talks are going to probably go right down the wire, and the risk of a no deal end to the transition period at the end of this year is growing, and that is just the truth. So it just seems that yes, this Bank of England meeting was a little bit less dovish than expected. But nobody wants to be long GBP anyway. It's just a small blip up and then resuming the downwards trend. And to be honest, this trend is likely to continue because this Brexit stalemate isn't going anywhere. The only thing I think that really could save GBP is if the dollar starts falling again. But we will see. That is pretty much it from me for now, guys, and I will see you in the next one.